Welcome to the Coin Bureau Weekly News Roundup. My name is Guy.
And my name is Jessica. Here are the top stories in crypto this week. Pump or dump? BTC prepares for a massive move after recovering from a recent dip. What catalyst will determine its next direction?
Ethereum ETF delayed. The SEC kicks the can down the road as the Dencun upgrade's launch date comes into view. When will ETH finally explode?
SEC versus Binance. The world's largest cryptocurrency exchange continues to wrestle with the anti-crypto regulator, while its former CEO awaits his sentencing date. How this could impact the crypto market.
China's economy implodes. Hong Kong's stock index hits a multi-year low, the PBOC steps in to defend the yuan, and the CCP considers a multi-trillion-dollar bailout. Everything you need to know.
And a closer look at last week's top-performing cryptos and where they could be headed next.
All this and more in just a moment. Last week, BTC reclaimed the key level of 42k after having fallen to 39k. It's not entirely clear what caused the rally, but it was driven primarily by hundreds of millions of dollars of short liquidations. This makes sense given that many traders were short as they were expecting BTC to fall to around 36k from 39k. From a more fundamental perspective, the outflows from Grayscale's spot Bitcoin ETF have slowed down, at least according to JP Morgan. The practical effect of this is less sell pressure, which was offsetting most of the buying pressure coming from inflows into the other spot ETFs. To put things into perspective, Grayscale's spot Bitcoin ETF experienced over $4 billion of outflows, while the other spot ETFs experienced just over $5 billion of inflows. The result was less than $1 billion of buying pressure, which was likely offset by BTC whales taking profits in both the spot and futures markets. With Grayscale's outflows now in the rearview mirror, so it seems, it's likely that the inflows into the other spot ETFs will have a positive impact on price in the coming days. Of course, this assumes that we will continue to see the same degree of inflows. This seems likely given that new players continue to enter. Don't take my word for it, though. Financial firm Franklin Templeton recently revealed that the spot Bitcoin ETFs will become more popular as investment advisors become more familiar with them. Obviously, this isn't going to happen all at once. It will be a slow trickle of new entrants each week. This foreshadows a scenario where BTC continues to trade around the low to mid 40k range, something that's supported by the charts. On the daily, BTC is sitting right on top of the Bollinger Band moving average, which could mean that it's about to get rejected or break above it. If you're subscribed to our weekly newsletter, you'll know that we believe there's a good chance BTC will break above this average due to various factors, namely the Fed and the US Treasury. So be sure to subscribe to our weekly newsletter if you haven't already. It has forward guidance that you can't miss. Link is in the description. But back to those BTC charts. Now, if you zoom out to the weekly, you can clearly see that BTC has already been consolidating around the low to mid 40k range for more than a month. This is eerily similar to what BTC did during the 2019 bear market rally, where its price likewise traded sideways while many alts rallied. Now, if you want to maximize your profits on the altcoin rallies we could see this time around, then be sure to check out the Coin Bureau deals page. It's got trading fee discounts of up to 60% and sign-up bonuses of up to 50 grand on the best crypto exchanges. These deals are exclusively for the viewers of this channel and only available for a limited time, so do take advantage of them using the link in the description ASAP. Now, speaking of altcoins, the one that everyone has been watching is ETH. Besides the fact that it's the second largest crypto by market cap, the fact that it has its own pending spot ETF applications has led to speculation that it will eventually see the same explosive growth that BTC has. With the exception of the sudden rally earlier this month, however, ETH has continued to underperform against BTC as well as against many other altcoins. This can be clearly seen on ETH's daily chart, which reveals that it has basically been chopping between 2.2 and 2.4k since the start of December, almost 2 months. It's a similar story for the ETH BTC chart, which, as I'm sure you all know, measures ETH's value against BTC. As you can see, the ETH BTC chart is likewise retesting a key moving average that ETH has been oscillating around since last October. That's almost 4 months. If you watched our most recent Ethereum update, you'll know that the main reason why ETH was underperforming late last year was because all the focus was around BTC and select altcoins. It appears that its recent mean reverting volatility has its roots in the uncertainty around Ethereum's own ETF applications. As some of you may have heard, the SEC recently delayed BlackRock's spot Ethereum ETF application until March, and also delayed Grayscale's application to convert its ETH trust into an ETF. I'll remind you that Grayscale took the SEC to court and won when the regulator rejected Grayscale's GBTC trust conversion application. Now, according to Bloomberg ETF analyst James Seyffart, it's likely that the SEC will continue to delay all these applications until the final decision date, which is in late May. What's strange is that the consensus is less strong about spot Ethereum ETFs being approved, despite them being practically identical to the spot Bitcoin ETFs. In any case, the good news is that the spot Ethereum ETF isn't the only catalyst in play for the second largest crypto. Another catalyst is the upcoming Denkun upgrade, which will make Ethereum's layer 2s exponentially cheaper and faster. Denkun recently launched on testnet with a few hiccups. So, this begs the question of when Denkun will launch on mainnet. Well, assuming no additional hiccups on other testnets, the answer seems to be by the end of February, per a recent blog post by the Ethereum Foundation. Now, it goes without saying that this will be bullish for ETH, but it could be even more bullish for its layer 2s. The real question, though, is what effect the Denkun upgrade will have on other layer 1s that leverage the EVM. For context, these so-called Ethereum killers were being used as de facto layer 2s during the last crypto bull market. This was likely because Ethereum's layer 2 ecosystem was still in development. Today, however, Ethereum's layer 2 ecosystem is exploding to the point that it's overtaking Ethereum itself on key metrics like daily active wallets and such. The only edge that these EVM-compatible layer 1s seem to have was speed and cost, and, as I just mentioned, Denkun will make layer 2s faster and cheaper. Now, we'll be doing a deep dive into what the Denkun upgrade could mean for ETH and its layer 2s very soon, so be sure to subscribe to the channel and ping that notification bell so you don't miss it. And, while you're about it, smash that like button to give this video a boost. Now, as bullish as the crypto market has been lately, it's important to remember that there are still lots of bears lurking in the background. One of the biggest bears is one that seems to have been all but forgotten, and that's the SEC's ongoing lawsuit against Binance, which is reportedly starting to intensify. For reference, Binance recently settled with US regulators, including the CFTC and the DOJ. If you watched our video about that Binance settlement, however, you'll know that one regulator was notably absent, the SEC, which continues its anti-crypto crusade against crypto projects and exchanges. Recent court filings reveal that the SEC is unsatisfied with the information that's been provided by Binance International about its operations and its relationship with Binance's US arm. Naturally, the regulator is trying to find evidence of another FTX, with the parent company controlling all assets. So far, though, the SEC's probing has revealed zero evidence of this happening at Binance, and it sounds like the regulator is starting to get desperate. That's because it's now asking for additional Binance officials to be deposed, that is, cross-examined. That's despite the fact that it's already deposed a dozen Binance employees. What's interesting, though, is that the SEC apparently hasn't deposed Binance's co-founder and former CEO, Changpeng Zhao, aka CZ. Court filings reveal, however, that discussions about this deposition are in progress, which could mean that CZ will once again be called to the stand to answer the SEC's loaded questions. On that note, it also seems that everyone has forgotten that CZ is awaiting his sentencing date somewhere in the United States. It was recently revealed that CZ had tried to pledge his entire stake in Binance US in order to get permission to travel to the UAE while he awaits sentencing, something that was denied by the judge. What's funny is that nobody knows where in the US CZ is, nor what he's been up to. He hasn't been active on Twitter since early December, and it's unclear when he'll be back. His last tweet suggested that he's taking some much-needed time off after grinding in crypto every day for a decade. Fair enough, if you ask me. Chances are we won't see him reappear in the public eye until just before his sentencing, which is scheduled to occur on Friday, the 23rd of February. That's when the judge will decide how much jail time CZ gets, if any. Now, this decision could affect the crypto market, and it could particularly affect BNB, which CZ is now focused on. If you don't understand why this is so significant, take a second to recall what happened during SBF's trial last year. It paradoxically became a very bullish catalyst for the crypto market, and particularly for cryptos previously affiliated with FTX, like Solana. It's possible we'll see a similar phenomenon this time around. But again, it's important to remember that the SEC is still going after Binance. With a bit of luck, though, the judge in the SEC's case against Coinbase will throw out some or all of that case following their recent meeting. And this could set the precedent that could finally kill this crypto bear. That is, the uncertainty around the SEC's case against Binance. Unfortunately, though, this won't have any effect on all the bearish macro factors that could still affect the crypto market. The one macro factor that's been in the spotlight recently is China's continued economic weakness, something that could affect the crypto market both directly and indirectly. You see, even though trading crypto is banned in China, holding crypto apparently isn't, at least according to multiple court rulings. What this means is that there are likely lots of Chinese citizens who are still holding crypto. If the Chinese economy continues to deteriorate, they could sell these assets for fiat. And, come to think of it, it's possible that a lot of the ICO-era ETH that's been waking up over the last few months is coming from Chinese investors who are running short on cash. The larger transfers of ETH to exchanges could likewise be coming from Ethereum miners from back when ETH was still proof of work. At the same time, the capital flight that China's economic situation is likely causing could increase the risk that the CCP tightens the screws even harder on crypto. The elephant in the room here is stablecoins like USDT, which are known to be used to move money in and out of the Chinese mainland. Some of you might remember that Chinese government agencies were calling for a tether crackdown due to illicit forex trading, the same agencies that are headed by the central bank governor Pan Gongsheng. You can learn more about him and his role in China's crypto crackdown in the description. Anyway, this ties into the indirect effects that China's continued economic weakness could have on crypto. In addition to tightening the screws around capital controls, China's economic weakness could result in even more intervention by the PBOC to defend the yuan's value, something we reportedly saw last week. For those unfamiliar, when a central bank defends the value of its country's currency, this almost always involves selling large amounts of US government debt for US dollars, which are then used to buy the currency in question. This can have the knock-on effect of raising yields on US government debt. And because yields on US government debt often determine interest rates of similar duration, This could cause interest rates in the US to rise, mainly long-term interest rates. As it so happens, the yield on the 10-year Treasury jumped last week, though this was likely due to other factors like economic data. Regardless, there is a bullish side to China's economic weakness, and that's all the stimulus that the government and the central bank are likely to unleash in order to stop it. Now, so far, the CCP has been steadfast about avoiding stimulus at all costs, likely because it risks further devaluing the yuan. However, the tone is slowly but surely starting to change. Last week, Pan announced that Chinese banks will be able to hold smaller cash reserves starting from the 5th of February. It's hoped that this will increase lending activity, i.e., more money creation. There is a chance that some of this money will find its way into crypto. The caveat, however, is that expanding lending capacity doesn't necessarily mean that anyone will be lining up to borrow. Moreover, the CCP isn't rushing to put the pedal to the metal. Macro analysts believe that this will only happen once the Federal Reserve starts easing. That will allow the PBOC to follow suit without weakening the yuan. Newsflash, but the Fed will be announcing its latest interest rate decision this Wednesday, i.e. tomorrow. So, depending on what Fed Chairman Jerome Powell says at the press conference, this could give China the wiggle room it needs, or it could force the CCP to try and keep things together until March, when the first Fed rate cuts could be due. And with all that said, it's about time we looked at last week's top-performing cryptos. So, Jessica, over to you.
Thanks, Guy. Last week's top-performing cryptos were Manta Network, Conflux, Sui, Helium, and IOTA. Starting with Manta Network, its Manta token appears to have pumped due to successive exchange listing after the Layer 2's token launched. The Layer 2 itself has also seen a surge in total value locked, making it the third largest Layer 2 by TVL, according to L2Beat. Given that Manta is literally brand new, it's very difficult to analyze its price. With a market cap of $900 million, though, it seems unlikely that it could grow much more from here, particularly when you factor in the competition it's facing from other Layer 2s, some of whom have yet to launch their tokens. Next up, we have Conflux, whose CFX coin appears to have pumped on the news that the project has released a special SIM card in China. Very cool. It appears that this news was enough to cause CFX to break out of a massive channel that it's been stuck in since early December. If this breakout plays out, CFX could see another week or two of double-digit gains until it hits that next key resistance level at around 30 cents. As for Sui, its Sui coin appears to have pumped on the news that Sui has become one of the largest smart contract cryptocurrencies by total value locked, according to DeFi Llama. As you can see, Sui's TVL continues its parabolic trajectory. Sui's price chart paints an even more bullish picture, a massive cup and handle pattern. If it plays out, Sui could rise as high as $2.5 in the coming weeks. When it comes to Helium, its HNT token appears to have pumped in response to the news that the project has partnered with a massive telecoms company in Latin America to roll out mobile hotspots across the country, something we covered in a recent Q&A. As you can see, HNT is painting a similarly bullish pattern, which could very well be a bull flag. If it plays out, HNT could rise as high as $15 in the coming weeks. Last but not least, we have IOTA, whose IOTA coin rallied for unknown reasons. Our best guess is that it has to do with comments made by members of the project team during a recent AMA with KuCoin. In contrast to Sui and HNT, IOTA is looking a lot weaker on the price charts. It's back above the Bollinger Band moving average on the daily, which is a good sign, but it faces a lot of resistance to the upside. In the absence of any additional catalysts, it may not move much higher for the time being. Note that if you do want to keep track of which cryptos are pumping and also where you can trade them, check out the Coin Bureau Telegram channel. The link is in the description.
And that is all for today's Coin Bureau Weekly Crypto Review.
If you enjoyed it, then you know what to do. Hit that like button, subscribe button, and bell icon too.
Don't forget to check out our deals page where we have massive discounts and airdrop bonuses of up to $50,000 on some of the best crypto exchanges, only for the viewers of this channel.
Also, if you want to pick up some snazzy crypto merch, the Coin Bureau merch store has it all.
You can find the link to those resources and many others in the description below.
Thank you so much for watching, and we'll see you in next week's episode.
Woo!